So hi, now we are starting with the revision of consignment. Okay, we are done with all the sums. So we'll be starting with the revision of consignment. So accounting for consignment, basically this is not like a normal transaction, this is a special transaction. In normal transaction, how the sale and purchases happen, some supplier will send a goods to the buyer and buyer will purchase it from the supplier and will send it to his consumers or his customers, right? But in consignment what happens, one person will send a goods to the other person. One person will send goods to the other person, whereas that other person will sell goods to the customer but on behalf of the first person. I repeat, one person will send goods to the other person, whereas other person will sell goods to the customer on behalf of the first person. The person who sends the goods to the other person is called as a consignor. He is called as a consignor, whereas the person who takes the goods from that sender, consignor, is called as consignee. What is the work of the consignee? Work of the consignee is to sell the goods to customers on behalf of the consignor. On behalf of the consignor, okay? What consignor will do? And the relationship between this consignor and consignee is principal agent relationship. Consignor will be the principal and consignee will be the agent. Agent means he is acting for him. That's it. Okay? He is helping him. Fine. Okay. What consignor will do? Consignor will send the goods to the consignee. Consignor will send goods to the consignee. I repeat, consignor will not sell goods to the consignee. Consignor will send goods to the consignee. Okay, sir, he will send goods to the consignee. But along with the goods, he will send some document which is known as pro forma invoice. So pro forma invoice is sent by the consignor to the consignee along with the goods. What are the information it will be contain? What are the information it will contain? It will contain information regarding how many quantity of goods sent, at what price it is sent, at what price it should be sold, how much percentage is the commission, so on. Okay, fine. Later what consignee will do? Consignee will sell goods to the customer. Consignee will sell goods to the customer on behalf of the consignor, which means the goods which consignor sent to the consignee will be in the name of the consignor only. In the name of the consignor means the goods will be the stock of consignor and risk of the goods will be of the consignor. I repeat, the goods which is sent by the consignor to the consignee will be the stock of the consignor, and that will be at the risk of the consignor itself and not the consignee. Although it is laying in the godown of the consignee, it is at the risk of the consignor. Ownership will be there with the consignor until it is sold to the customer. Okay. Later customer will pay the money. Now that money our consignee will send to our consignor periodically. Okay. But he will not only send the money, he will also send something called account sales. Okay. Okay. Now periodically when he sends the money, he will not send the whole money. Why he will not send the whole money? Because for making such sale, he is entitled to a commission. Yes sir, he is entitled to a commission. So what he will do? He will deduct that such commission from that particular sales amount. He will deduct that particular amount from sales amount. Also, when the consignor send the goods, he might have taken some advance from the consignee. When consignor sends the goods to the consignee, he might have taken advance from the consignee, which means consignee had already paid some amount. Now he will deduct that too. Now he will deduct that also. If any advance is paid, that also he will deduct. Along with that, very careful, one more item is there, expenses. Usually whatever might be the expenses relating to the consignment, whether spent by the consignor or consignee, whether such expense is spent by the consignor or consignee, all the expenses should be paid by the consignor. unless agreement say otherwise. If agreement says such certain expenses should be bared by the consignee, then consignee will bear. If question is silent, we should always assume that consignor should bear all the expenses of the consignment, although it is paid by consignee or consignor. It's paid by consignor or consignee. So when it is paid by the consignee, consignee will deduct such amount also from the sales amount while crediting it to the consignor. While sending a remittance to the consignor, he will deduct such amount also. Basically, he will deduct 4 amounts. One is our advance, which he paid, 3 amounts basically. One is advance. Second is any expenses he incurred, he paid, but which should be bared by our consignor. That also will deduct. And commission. Now the question comes, sir, on what he is entitled to a commission? Usually it will be given in the question. Usually there are 3 kind of commission. What are the 3 kind of commission, sir? 3 kind of commission are ordinary commission, del creditor commission, overriding commission. Ordinary commission, del creditor commission, overriding commission. What do you mean by ordinary commission, sir? Ordinary commission is a commission which is given on the gross sales, irrespective of any conditions. Without any conditions, certain commission will be given to our consignee by our consignor, which is called as a ordinary commission. It will be usually given on the gross sales. If question says particularly on the cash collected by our consignee, then you can say that you can compute on that money, otherwise it will be on the gross sales. Sir, what do you mean by del creditor commission? I already told you any expense of the consignment should be bared by the consignor. And also we know that there is one major expense, usually major if there is no control over the debtors, that is our bad debt. So when there is a bad debt, usually consignor should bear it. But if consignor want to transfer the risk of bad debt to the consignee, he will pay certain commission to the consignee called as del creditor commission. When consignor want to transfer the risk of bad debt to the consignee, he will pay certain commission which is called as del creditor commission. So when the del creditor commission is allowed by the consignor, bad debt expense should be bared by the consignee and not the consignor. Now, so it is relating to credit sale, no sir? Yes, it is relating to credit sale. So while computing the del creditor commission, if they have given 5% del creditor commission, are we required to take the credit sale only? No. If the question is silent about particularly on credit sale, then you should take it on a gross sale, cash sale plus credit sale. Okay, if the question is particularly asking del creditor commission to be allowed on a credit sale, then only take it on credit sale. Otherwise, just to treat it as a ordinary commission only while computing the amount. Okay, just like ordinary commission you do. But in question they particularly ask, boss, del creditor commission to be given on a credit sales, then compute it on credit sales. Okay sir, done. Next one is overriding commission. Sir, what do you mean by overriding commission? Overriding commission is nothing but commission paid by the consignor to the consignee for making a very good performance, for performing well. You know, we will give certain limit, boss, so much should be your sales. Okay, if our consignee makes sales more than that, which means his performance is so good, no, for the difference portion, consignor will pay an additional commission which is called as overriding commission. For the additional performance, additional commission. Such commission is known as overriding commission. Okay. Now the question comes, sir, you told no, consignor will send goods to the consignee. Yes, consignor will send goods to the consignee. Sir, whether consignor should send such goods to the consignee at a cost price or what price, sir? Depending upon the consignor. If consignor want to keep his cost secret, if he want to keep his profit secret, he can send it at a invoice price too. So, or if he don't want, he can send it at a cost price also. So, consignor can send a goods at a cost price or at a invoice price. You can send it at a cost price or invoice price. If it is sent at a cost price, there is no need to adjust the loading. There is no need to adjust the loading. But if it's sent at an invoice price, we have to adjust the loading. We have to adjust the loading. Okay, sir. What do you mean by loading now? Loading is nothing but the profit element which is added to the cost while computing the invoice price. For example, the cost of the goods sent is 100. You are sending at an invoice price of 125. So the 25 rupees is there. No, that is called as loading. That is called as loading. Now, when the goods sent at a consignment, for example, if we are writing it at 125 and the sales is 50, then the profit will come as how much? The profit will come as 25. But the actual profit is how much? Actual profit is 150 minus 100. No, not 150 minus 125. 150 minus 100. Which means to avoid this kind of things, we have to create something, or we have to take out the loading from there. How to take out the loading, sir? When the opening stock is there, opposite side we have to write stock reserve. Opposite side we have to write stock reserve. For example, opening stock is 125, 100 is the cost, 25 is the loading. So in the opening stock, we write it as a consignment stock. It is showing 125. Now in the credit side, we should write 25 as a stock reserve, which is loading portion. Debit side 125, credit 25, which is basically the final effect will be 100. The final effect will be 100. Okay. Later we will send a goods at invoice price. Yes, sir, we will send a goods at invoice price. Let us assume we are sending a goods at invoice price. 1000 rupees is a cost and 250 is a 1000 rupees is a cost and 250 is the loading. So 1250 we will write in the debit side. In credit side, you should write buy goods sent on consignment. In debit side, you will write 2 goods sent on consignment 1250. In credit side, you will write buy goods sent on consignment 250. So finally, debit side 1000 will be the balance, right? Closing stock will be there, no? Closing stock of course will be there in the credit side. So by consignment stock, let us assume 250 is the invoice price of that. So in credit side 250 is there, 50 is the loading of that. So that we will write 2 stock reserve, 50 in the debit side. So the closing balance, closing stock also will become 200. Like that, by taking it to the opposite side, we eliminate it. We eliminate the loading included in it. Okay, sir, fine. So you told there are 2 parties involved in this. Yes, 2 parties involved. Who are the 2 parties, sir? One party is consignor, the other party is consignee. One party is a consignor, the other party is a consignee. Okay, sir. Who is a consignor, consignee? I told. What are the document? Proforma invoice and account sales. In account sales, what are the things will be there? In account sales, our consignee will tell in this period so much is the sales, so much is the goods which is left with me, so much is my expenses, so much is my commission, so much is the advance which I given to you. After deducting all these things, so much I am going to remit to you. All these details will be given in the account sales. Our consignor will book these transactions of the consignment by taking the figures of the account sales. Okay, that will be the document to record the transaction of the account consignment. Okay, when it comes to the expenses, expenses can be paid by the consignor, paid by the consignor or consignee. All the expenses should be paid by the consignor if the question is silent. Okay, fine. And expenses you can divide into 2. Okay, expenses you can divide into 2. Recurring expense, non-recurring expense. Recurring expense, non-recurring expense. What do you mean by non-recurring expense? Expense which is made only once for such goods. For example, I am sending one consignment of the goods of 100 units. For such 100 units, only one time we are going to incur certain expenditures. For example, transportation insurance, freight, coolie, the loading charges, unloading charges, all those things only once will be done for a goods. So that is non-recurring in nature. Next one is recurring in nature, which is irrespective of the goods. How much goods is there, that we don't know. Based on a periodically or on some basis, we keep on paying certain expenditure like advertisement, salesman salary, go down rent, all those things. Usually you can say this way. any expenses incurred till reaching the go down of the consignee, any expenses incurred till reaching the go down of the consignee will be non-recurring, whereas if any expenses is incurred after reaching the go down of the consignee, it will be recurring. I repeat, till the go down of the consignee it's non-recurring, after the go down of the consignee it's recurring. Okay sir, but why we divide this expense? Because of the valuation of the stock. This will help in valuing a stock which is lost, valuing the closing stock. Non-recurring expenditure should be included in the cost of the inventory. Non-recurring expenditure should be included in the cost of the inventory, whereas recurring inventory there is no need to include it in the cost of the inventory. Okay, it should be charged against the consignment account, whereas non-recurring in nature, that should be added to the cost of the inventory depending upon the stage in which the inventory is there. For example, inventory which is lost in transit, for that only consignor expenses will come, not the consignee expense, because consignee will do the expense, or consignee will incur an expense when he receives the goods. When he receives the goods. Here what is happening? Before goods coming to the hand of the consignee itself, it's getting spoiled, which means for that goods only expenses is spent is by the consignor, not the consignee. Okay sir, fine. So non-recurring in nature included in the cost of the goods, whereas recurring in nature not included. There are two kind of losses. One is normal loss, the other one is abnormal loss. What is normal loss? Normal loss is the loss which is incurred due to the inherent nature of the goods. Okay, you cannot avoid it. Normal loss, you cannot avoid it. It is a nature of the goods. For example, if it's a petrol, evaporation is the nature of the goods. If it is a fruits, the spoilage to some extent is a nature of the goods. If it's a flower, spoilage of certain flower to some extent is a normal loss. Okay, it is a nature of the particular goods. Whereas abnormal loss is, the loss is incurred due to your ignorance, due to your negligence. You can avoid the abnormal losses. Okay, loss by fire, loss in transit, all those things you can avoid. So as the normal loss we cannot avoid, it is fair to charge it to the customer. How to charge it to the customer? Add it to the cost. So what we will do, if it's a normal loss, we will allocate it to the good units. We will compute the total cost divided by number of good units. For all the units we will allocate the total cost. That one we divide it by good units, which means for normal loss separate entry is not required. For a normal loss separate entry is not required. Whereas abnormal loss you cannot charge it to customer because it's your mistake. So you cannot add it to the cost. What you can do, you can write it off against the P&L. Okay. Of course, you are not required to write off everything against the P&L. If there is any insurance claim, you have to take certain amount out of the loss, and what is the loss remaining at the end, that will be transferred to P&L. I mean charge to P&L. Okay. It should not be added to the cost. I repeat, only normal loss should be added to the cost, not to the not the abnormal loss. Next comes valuation of stock. How should value? Simple, as usual, AS2. You should value your stock at cost or NRV, whichever is lower. What is NRV, sir? Net realizable value. What is net realizable value? Sales price minus if any expenditure you should incur to make such sales. I repeat, sales price minus if any expenses you should make to make such sale. You should incur to make such sale. That is NRV. So cost or NRV, whichever is lower, that we should compute. So how to compute the cost, sir? Cost I already told you, non-recurring nature expense should be added while computing the cost of goods. Okay. Now goods sent, goods can be sent at a cost price or a invoice price. Invoice price means what, sir? Cost price plus loading, profit element. Now comes accounting for consignment. Accounting for consignment. There are two parties involved. One is consignor, the other one is consignee. Consignor and a consignee. Consignor usually maintains four accounts. Okay, usually maintains 4 accounts, of course relating to the consignment transaction. Generally to his business he will be having normal accounts, but for a consignment he will keep a separate books only. Final effect, final amount, net profit or net loss will be transferred to the general P&L of the consignor. I repeat, for consignment we will keep a separate books and we will do all the transaction. Later the end result of the consignment business will be transferred to the general P&L. Okay. So consignor will prepare 4 accounts: consignment account, consignee account, goods sent on consignment account and consignment stock account. Whereas consignee will prepare 4 accounts, that is consignor account, customer account, commission account and bank account usually. Okay. So what is consignment account, sir? Consignment account is a nominal account which will record the transaction of the consignment. Okay. Nominal account, which means debit the expenses and losses, credit the incomes and gains. Credit the incomes and gains. What is consignee account, sir? Consignee is our debtor as well as creditor. To some extent he is creditor, to some extent he is debtor, which means he is basically our agent. So whatever the transaction will affect his account, that will be recorded in the consignee account. Goods sent on consignment, it is not a normal sales, no, it is just a goods sending on consignment. So for that, to keep a control over such goods, we are going to maintain one more account called goods sent on consignment account. Later we are maintaining a consignment stock account to record opening stock of consignment and closing stock of consignment. Consignee will prepare a consignor account. For a consignee, again consignor might be a debtor as well as creditor. Usually at the end of the time it will be creditor. Later customer, because consignee will deal with the customers, no, he will collect the money from the customer and he will remit it to the consignor. So he will maintain one account for the customer. Later commission, because he is entitled to a commission, he is not entitled to any profit portion. For the work he is doing, he will get a commission. Okay. Later bank account as usual. Okay, sir. What will be the journal entries? What will be the journal entries? Opening stock, you know that in the trading account, which side we will write? Debit side we will write. What will be the entry for opening stock in the normal business? Trading account debit to opening stock, right? Trading account debit to opening stock. Here what we will do, trading account, again it's a nominal account. Here we are not transferring it to trading account. Here we are transferring it to the consignment account. So consignment account debit to opening stock. It is not a general opening stock. It is a consignment stock. So the entry will be consignment account debit to consignment stock account. Now the question comes, sir, what if it is sent at a invoice price? If it is sent at a cost price, only one entry. If it is at an invoice price, as I already told, you have to eliminate the profit portion or a risk element, loading element, right? So how will you take it out? Stock reserve to consignment, opposite entry, consignment account debit to consignment stock account, later stock reserve to consignment account. Okay. Next, when the goods sent on consignment, again when it is sent at a cost price or when it is sent at a invoice price, again it's an expense, we should debit. So consignment account debit to cost goods sent on consignment account debit to goods sent on consignment, only one entry if it is sent at a cost. If it is sent at a invoice price, entry will be, first entry will be same, consignment account debit to goods sent on consignment. Later we should reverse it for the loading element, for the 250 rupees which I told earlier. So what will be the entry, sir? Goods sent on consignment account debit to consignment account, reversal entry for the portion of the loading amount. Later when we receive an advance from the consignee, consignor will pass what entry, sir? He will pass, if it is paid in a bank account debit to consignee account as usual, just like our customer, bank account debit to consignee account. Later if it's received in the bills of exchange, as it is a receivable for us, bills receivable account debit to consignee account. Okay. Later when the expenses incurred by the consignor, usually what will be the entry? Expense account debit to bank account. Later that expense should be charged against the P&L. Entry will be P&L account debit to expense account. As expense is a nominal account in the traditional approach, or expense account in the modern approach, you know that nominal account or expense and income account as per the modern approach, both should be written off at the end of the year. They should not show any balance. Both should be written off to the P&L. So generally what entry we will pass? Expense account debit to bank account. If we paid in cash, so cash or bank, so consignor will pay in cash or bank. So expense account debit to bank account, later P&L account debit to expense account. We can say that expense debit, expense credit we can cancel. At the end of the day, P&L account debit to bank account will be the entry. But the thing is, here we are not transferring it directly to the P&L account. No, we are making one more nominal account which is called as a consignment account. So we should charge it to there. After the net result will be transferred to the P&L account. So I can say that expense account debit to bank account, later consignment account debit to expense account. So if I cancel expense account, entry will be consignment account debit to bank account. So expense incurred by the consignor, usually we will do it as consignment account debit to bank account. When the goods is in transit at the end of the year, as we debited the consignment, when we sent a goods, if the goods is still in the way, it is not in the hand of consignor as well as not in the hand of consignee, which is in between. At the end of the period, we will credit the consignment, we will debit the goods in transit. Goods in transit will be included in the closing stock. Okay, it will be included in the closing stock. And be careful, the closing stock of the consignment will be the closing stock of the consignor, not the consignee. Although goods is there with the consignee, the closing stock of the consignment will be the closing stock of the consignor, not the consignee. If there is any loading element in the goods in transit, that also you should pass the reversal entry and you should eliminate it. If the goods is lost in transit, on that also you should eliminate. Okay, you should always make sure that you will eliminate the loading by transferring, by passing the opposite entry. Okay, when the expense is paid by the consignee, which means on our behalf someone is paying the expense, what will be the entry? Usually expense account debit to creditor account, because the person who is incurring expense will become our creditor. So expense account debit to creditor account, later P&L account debit to expense account. Here P&L account we don't charge, we will charge it to the consignment account. So I can say it as expense account debit to consignee account who is paying on our behalf. So expense account debit to consignee account, consignment account debit to expense account, expense account getting cancelled. Final entry will be consignment account debit to consignee account. When the expense is paid by the consignee, we can simply pass the entry called a consignment account debit to consignee account. Okay sir, fine. When the goods is sold by the consignee, when our consignee sells the goods, he will send a final report. No, so much is the goods I sent. In what format, in what account he will send, in what document he will send it in a account sales. So at that time what will be the entry? As we are not doing any sales, we do not have any relationship with our customer. Who will be having relationship with our customer? Our agent, that is our consignee. So basically what we will do? We will hold a consignee for that. Usually what will be the entry? Debtor account debit to sales account. Here later sales account will be charged to the trading account. Trading account debit to, sales account debit to trading account. Basically we can cancel sales and we can simply say it as debtor account debit to trading account. Here trading account we are not maintaining. Here we are maintaining some special account for that, which is called as consignment account. So final entry will be consignee account debit to consignment account. Consignee account debit to consignment account for the amount of goods sent. Okay. Next, when the commission is payable, we are not paying in cash or bank. Our consignee only deducting the money and sending to us, which means it is our expense. We have to agree for that. So expense, what we will do, we will debit the consignment account. So for whom, to whom it is payable? To consignee. So what will be the entry? Consignment account debit to consignee account for the commission. Okay. Next is bad debt expense. Bad debt expense, boss, you have to look whether del creditor commission is maintained or whether del creditor commission is not maintained. Whether del creditor commission is maintained or whether del creditor commission is not maintained. If the del creditor commission is allowed, I mean whether del creditor commission is given by our consignor to the consignee, then no entry will come in the book of a consignor for the bad debt, as it is a risk of our consignee, as we are giving him already enough commission to make it good. Also, no entry in the book of consignor when the del creditor commission is allowed. If it is not allowed, it will be the expense of the consignor. So we should charge it to our consignment account. What will be the entry? Normal expense entry. That is consignment account debit to consignee account, because consignee will not be getting so much money. For example, we sold, consignee sold a goods of 1 lakh rupees. So consignee account, we debited him for 1 lakh rupees, no? But now he is not collecting 1 lakh rupees, he is collecting only 90,000 rupees, 10,000 is a bad debt, which means now we have to credit his account. Credit his account. He can only pay us only 90,000 rupees because bad debt is not his expense, it is our expense. He will deduct it from the money which is payable to us and he will send the remaining money to us. So we will credit his account for the such amount. So entry will be consignment account debit to consignee account. Consignment account debit to consignee account. Next is the closing stock, boss. Next is the closing stock. When the closing stock is there at the cost price, usually closing stock entry. Closing stock will be our asset debit to consignment account. That is consignment stock account debit to consignment account. When it is at a invoice price, of course we have to eliminate the loading. What will be the first entry? Normal entry, consignment stock account debit to consignment. Later reversal entry, one more, consignment account debit to stock reserve account. For opening stock and closing stock, it is not consignment stock, it is stock reserve. Okay. Okay. When after all this, consignee will deduct his expenses, his commission, his advance. After all this, he will pay the money. No, what will be the entry for that? Bank account or bills receivable account debit, depending upon on what he will send to consignee account. To consignee account. Done. In the books of consignee, what will be the entries, sir? In the books of consignee, when the goods is received from the consignor, no entry. Why? Because he is not purchasing it. He is just a holder of that goods. Of course, some consignee might prepare some account called consignment inward account. It is just as same as our consignor's consignment account. But usually consignees won't maintain. So when the goods is received, no entry. When the goods is received, no entry. For opening stock, no entry because that stock is not the consignee stock, it is a consignor stock. Okay. When the consignee will send an advance to the consignor, entry will come. What entry, sir? We are paying, no. So we should credit our bank or bills payable. Liability increasing or asset decreasing. Consignor will be debited. To whom we are paying for consignor. So entry will be consignor account debit to bank or bills payable. Later, when we pay the expense of the consignment, as a consignee, it should be paid by consignor, no. Usually, what entry will pass? Expense account debit to bank account. Later, that expense is not our expense. That expense is not our expense. We should not charge it to our P&L. We should charge it to that party. So entry will be consignor to expense, right? So expense getting cancelled. Final entry will be consignor account debit to bank account. Consignor account debit to bank account. When we sell the goods to our customer, it is not our sales, it is our consignor sale, right? So when we sell the goods, usually what will be the entry? Bank account or debit account debit, bank account or debtor account debit to consignor to sales account. Later this sales usually will transfer it to the trading account. As it is not our sales, we cannot charge it, we cannot transfer it to, or we cannot credit it to our trading account. We should give it to our consignor, right? So sale account debit to consignor account. Simply I can say sale getting cancelled, bank account debit or debtor account debit to consignor account. To consignor account. Next, when the amount is received from the debtor will pay us, not our consignor. So when the debtor will pay us, what will be the entry? Bank or cash account debit to debtor account. Okay. Bad debt. When the bad debt is there, we should see whether we received the del creditor commission or not. Whether we received the del creditor commission or not. If we had received the del creditor commission, bad debt is our expense. So what will be the entry? Normal bad debt entry. Bad debt account debit to trade receivable account or debtor account. Bad debt, as it is our expense, bad debt account debit to trade receivable account. Okay. Later this bad debt, usually we will write it off against the P&L, but in the consignment case, please write it off against the commission received. Because you are receiving commission to incur that, no. So what will be the entry? Commission account debit to bad debt account. Commission account debit to bad debt account. When it is not received, when the del creditor commission is not received, that is not our expense. It should be reimbursed by our consignor. So he will become our debtor now to this transaction. What will be the entry? Consignor account debit to trade receivable account or debtor account. Consignor account debit to debtor account. For the commission, as it is our income, as our consignor should pay it, consignor account debit to commission income account. Okay, when we pay the final remittance, it will be consignor account debit to bank or bills payable account. Consignor account debit to bank or bills payable account. Okay, so much is only in the consignment. Of course, when it is there in the invoice price, we have to look into percentage very carefully, whether it's on sale or whether it's on cost. If you solve it on the basis of equation method, it will be very easy. For example, invoice price is equal to cost plus loading. If certain portion they have given, invoice price they have given, cost they didn't give, and they gave loading is 25% of the cost, I can say invoice price is so much, cost is C, loading is 0.25 C. If they say 20% of the invoice price, then I can say invoice price is equal to cost plus 0.2 of the invoice price. Getting right? So that's why it is better to take the equation. Many people will do 100 divided by 125, 100 divided by 75, all those things. I personally do not prefer that. You can solve the equation very easily. Cost minus loading is equal to, cost plus loading is equal to invoice price, or invoice price minus loading is equal to cost. With all these things you can do. Okay. So here ends our consignment revision. Hope you enjoyed.